Something to look for when you're trading is the moving averages. So on my chart here, I've got two. I've got this one, which is the comma. That's the paid to fade adaptive moving average with 250 and 9 for the settings. And I also, this blue one right here is EMA 21. So let's take a look at those. So when price is hugging the lines, then the lines are over top of each other, this is a bad time to trade. Price is chopping. It's easy to think price is going up, and then boom, comes down, takes you up. Going up again, boom, takes you up. Going down, and then boom, jumps up, takes you up. What you want is for price to get below or above the lines and have the price respect the line. That means stay below or stay above. So in this case, we see NQ below the comma, and the comma separating from the EMA 21. That's good momentum when we see that separation. And when the price is staying below the comma, that's a good trend to stay in. It's a good way to know when you should be getting out or if you should just hang on. So yeah, as price comes down here, it crosses back over the comma. This is a good time to get out. You could have got a preview if you look down here at the ultimate oscillator. Price kind of hit a bottom here and started coming up. Although price continued down here, you should be looking for price to reverse and start going up, because the oscillator is telling us. And the tiki squeeze is a little slower, but when you see that yellow line, that means price might be reversing and heading up. So now we cross the comma again, and we're staying above. The price is staying above the comma. And so that's a good time to get in, and price starts leveling off here, and you can see down on our ultimate oscillator the price is, the volume, the momentum's coming back down, and sure enough price follows that, and this time it doesn't go all the way to the bottom. It's good when you see it at the bottom, because that could mean it's oversold, or if it's at the top, maybe it's overbought, but you don't have to wait necessarily for that, but you can watch for when it crosses above. So in this case, it crosses above the EMA 21 and the comma, and quite a bit above. So this is a good trend. We see these green buy dots. That's a good time to stay in. So you can easily get 20 points, but you can get more than that, because you see we got a good distance between the price and the moving averages there. Price pulls back to the comma, touches it, pierces it, but stays above it. So you'd be getting very worried about holding your long when this happens. I'd be getting out probably. I'd be expecting this. I want to capture those gains. But if you're brave and you see price pierce but then stay above, and move up, there's some more gains to be had. Now here, we could see at the ultimate oscillator, went way up to the overbought line there, and it starts coming down. So you can expect price might be doing that. Doesn't always, but might be. But when you see these red lines, lower lows, lower highs, see the sell dots appearing, that matches what we were expecting, what we expected when we looked at the ultimate oscillator there. And price breaks below the moving averages. First the comma and then the EMA 21. And notice how price is respecting that comma. It's staying down. Sometimes it touches it, but it keeps going down. So if you can, it helps you to stay in the trade by watching these moving averages. As long as price is staying below, you can keep your trade open and be making not just 50-point gains or 100-point gains, but even more. And price comes up here and starts riding it here. It might be time to get out. And we could see at the ultimate oscillator, price has started coming up here. I'd be getting nervous right around here about getting out. Sure enough, it stayed below, kept below, and kept going down. I'm not sure I would be in it at this point though, because I see these yellow lines on Tiki Squeeze and the ultimate oscillator cross that 50 line in the middle. But often it goes above and then sure enough comes back down. And then when we see it break with a engulfing candle off the lower Bollinger Band, and then cross strong across the moving averages here, this is definitely where you want to be getting up. And now we're above the moving averages. If you got in here, you might get stopped out because it came down hard here. But when you see it bounce off the moving averages, this could be your entry right here for a quick 20 points. staying above, but not strong. See, these two lines are overlapping. When the wires are crossing here, that's not a strong trend. So you might want to wait for the trend to increase again. And here we go. We see buy dots appearing. Our ultimate oscillator shows the price is moving up. Tiki Squeeze agrees. And we've got some separation between price and the comma and between the EMA 21. This is a strong trend upwards. And then price switches, crosses the comma, starts coming down. And this is your early indication to get out of your long and get into your short. And we see that on the ultimate oscillator, which appears first before the squeeze does. And we see the sell dots appearing, and you can get a quick 20 points here. And price switches and goes back above the moving averages, and you get the idea here. And here it comes down, briefly pierces it, and heads back up. It only takes a minute to pierce below, but then quickly head back up. So I would completely understand if you got out of your long here because it broke through the moving averages. I like it these ones when it pierces, but in the same candle heads back up. I'd be getting nervous when we closed below, but it came back up and kept going higher, and lots more gains here. So what you're looking for is price staying above the moving averages, the comma, and the EMA 21, or below.